Today's the 13th of September 2021. My name is David Hickson, and in today's market update I'm going to be speaking about the S&P 500. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. So let's take a look at the S&P 500. My previous video about this particular instrument was at the end of August, 2 weeks ago, on August the 30th. And when we take a look at the detail, we'll discuss what's happened since that update. Let's first of all remind ourselves about the bigger picture, which is, of course, that a very big and important cycle trough formed in March of 2020. According to this analysis, which is the analysis that we have been tracking for many months in this particular instrument, that is a trough of 54-month magnitude. And you can see the 40-week cycle trough according to this particular analysis. That did an odd thing, that pen over there. So according to this analysis, the 40-week cycle trough was over here at the end of October. And the 18-month cycle trough, which is fairly debatable, it's a questionable position of that cycle trough, has, according to this analysis, been placed on the, I think it was the 19th of July, in about the middle of July. And in previous market updates, I've discussed that slightly questionable position for the 18-month cycle trough, and we might touch on it again in today's video a little bit, because it is still up for debate, if you like, in terms of the positioning of that cycle trough. You will notice that at the foot of the chart, the cycle troughs back here in March of 2020 have filled in diamonds. They are of a solid color, whereas over here we have hollow diamonds for the placement of the 18-month cycle trough. What that means is that Sentient Trader has positioned the 18-month cycle trough over here, but it does not really have enough hard evidence to be absolutely convinced. And so that might be called a tentative placement of the 18-month cycle trough. It is certainly not an absolutely confirmed placement of that cycle trough. But of course, when we're making trading decisions, we have to at some point say, well, I am going to decide that that is a trough of a particular cycle. And that is when Sentient Trader will position a hollow diamond. It doesn't mean that it's an incorrect position or a very worrying position by any means. It's simply where Sentient Trader thinks is most likely for the placement of that trough, but it is not absolutely confirmed. Okay, so this is the analysis that we have been tracking, and so there's nothing new over here. Let's zoom in and consider what has been happening. Well, actually, before we zoom in, I'd like to point out the two most important points about what this analysis tells us, because we're going to do that for each one of the analyses that we look at today. The first thing is that we are expecting an 80-day cycle trough over here, where this nest of lows indicates, which is in about a week to 10 days time. When we zoom in, we can look at that in a little more detail. And then the next thing that is expected to happen is a 20-week cycle trough, which is expected towards the end of November of this year. So those are the next two cycle events that we have to look forward to. The 80-day cycle trough later in September, and the 20-week cycle trough towards the end of November. Having established that, let's zoom in and take a look at what has been happening in this market. So again, my previous market update was on the 30th of August, which is this day over here. So that is when I last discussed this particular instrument. And let's display our FLD, because you will know that the FLD is a very powerful tool. The FLD, well, the letters FLD are simply an acronym for the future line of demarcation, which is a very simple tool that Hurst discovered, if you like. It's really simple. You can plot it on any chart. It is simply the median price, which is the mid price between the high price and the low price of every bar, displaced into the future by half of the cycle wavelength. And that is, of course, the trick. You need to have a cycle wavelength that you've calculated from performing a full Hurst cycles phasing analysis in order to plot your FLD. Of course, you could estimate it and you could plot an estimate for the FLD, but in order to do it correctly, you need to have performed an analysis to know what the current wavelength is of the cycle in question. So this is an FLD based upon the 20-day cycle, and that is the line that you see over here. Now, Hurst discovered this very powerful tool. Over the years that I've been working with Hurst cycles, I have observed a very interesting phenomenon that I now use in all of my trading, which is that price tends to interact with the FLD following a particular sequence. And I should say, for those Hurst purists out there, that the sequence of interactions between price and the FLD is not something that Hurst himself ever spoke about. It's something that I discovered or observed as I was trading according to my Hurst cycles analysis. And so that particular sequence of price interactions starts with a trough of, in this case, seeing as the FLD is based upon the 20-day FLD, we start with the trough of the 80-day cycle. And so here is that sequence following this 80-day cycle trough. Because of the principle of synchronicity, if the trough on the 19th of July was an 18-month cycle trough, it must also, of course, have been a trough of the 80-day cycle. And so our first interaction is an A category interaction, which then generates a target to the upside. Those targets are calculated by taking the previous extreme price, such as this low price over here, generating a target through the crossing point and extending an equal distance upwards. This first target was up here at around about 45.20, if memory serves me correctly. Now that was a slightly bearish sign, perhaps slightly bearish, in that the A category target is usually expected to be reached before price returns to the FLD for the B category interaction. Of course, it failed to reach that target, but it did reach it much later, way over here towards the end of August, probably hit it on about the 30th of August there. And so that late fulfillment of the target is perhaps a slightly bearish sign, not very bearish, but it is a slight indication that the cycles are struggling to influence prices to move upwards with the kind of bullish impetus that you would expect following an 18-month cycle trough. Of course, this is something that I mentioned in previous market updates. When you're experiencing price coming out of an 18-month cycle trough, you would normally expect some bulls to rush in there and force price upwards. Price has, of course, gone up, but it was slightly sluggish. At any rate, our next interaction was the B category interaction, which occurs at about the time of the first 20-day cycle trough following the 80-day cycle trough, from which we start interpreting our interactions between price and the FLD. And at that time, the interaction that is expected is that price will come down and find support at the level of the FLD, which, as I mentioned in my previous market update about the S&P500, is exactly what happened. Price came down and found approximate support at the level of the 20-day FLD. The C category interaction is when price pulls up and away from the FLD again, which it did over here in about the second week of August. Our next interaction is, of course, a D category interaction, which I discussed in previous market updates, which came down to the 40-day cycle trough. It brings price down to the 40-day cycle trough, which, according to this analysis over here, occurred in the third week of August. It achieved its target. It went slightly below that target, but then immediately bounced back up again, having encountered the 40-day cycle trough. The next interaction was the E category interaction, which generated a target to the upside, and depending which analysis we look at, that target was anywhere between about 45.50 and 45.70. And just a quick note, I say according to which analysis we look at, one of the really useful features about performing a Hurst cycles analysis and particularly in terms of applying this FLD trading strategy by looking at the interactions between price and the FLD, is even when you get a different analysis, very often your FLD will be in a very similar position, which is something that I hope to demonstrate in the course of today's video, because we're going to be taking a look at 3 analyses, and the FLD, the position of the FLD differs only very slightly. That is because when you have a different analysis, the wavelengths of each of the cycles, particularly the shorter cycles, don't actually differ that much, because they are still beating with the same rhythm. And so that makes this a very robust approach, even if you're looking at an analysis that turns out, with the benefit of hindsight, to have been incorrect. Quite possibly the position of the FLD that you might have been using to make trading decisions has been correct, or it has not strayed very far from the position that it will be in when the analysis becomes clear and you're looking at the correct analysis. And so the target for the E category interaction was very possibly achieved over here, right up at the top there, the peak on the 3rd of September. Some analyses, as I've mentioned, had a slightly higher target, which of course has not yet been reached. And so that E category interaction potentially failed to reach its target, which is also a slightly bearish sign. But it's not a reason to sell all your holdings and jump out of the market. But our next interaction is, of course, the F category interaction. And as I mentioned in my previous market update, I believe that F category interaction is where we expect price to cross down below the FLD and provide us with a good short trading opportunity, which is exactly what it did. It crossed down below that FLD. The target to the downside, I believe, according to this analysis, was at a level of 44.85, which was, of course, achieved at the end of last week. It was probably achieved, I believe, on Friday of last week. And so that F category target was achieved. Now, I've mentioned an F category interaction provides us with a good short trading opportunity, which it did here. But the extended opportunity that an F category interaction, and let me just remove all of that over there, the extended opportunity that an F category opportunity provides us with is the fact that, having achieved the target to the downside, first of all, very often that target will be exceeded, which it was a little bit on Friday, but not really by very much. Where is 85? It's probably somewhere over there. So it was only slightly exceeded. But the greater or extended opportunity is that, following an F category interaction, we expect price to come back up to the FLD and find resistance at the level of the FLD in a G category interaction, whereupon price will then return to its downward move in order to fall into this 80-day cycle trough, which is expected, as you can see over here, about next week, actually, roughly the 20th of September, maybe a few days after or even before. And so that is our expectation in terms of what is likely to happen if this is the correct analysis. We would expect to see price come up and find resistance at the level of the 20-day FLD, then turn down for the final move into the 80-day cycle trough. So that is our expectation based upon this analysis. Now let's take a look at some of the other analyses. As I've mentioned, there are 3 analyses that I would like to take a look at. The next one that we will look at is the default analysis. Here is that default analysis. What I mean by default is that I have not influenced it in any way. It's very important to remember that Sentient Trader is a tool in the hands of an analyst. It's not just a black box that spits out information. It's a tool to be used by the analyst to find the best possible analysis and then, of course, to make profitable trading decisions. However, over the years, I have discovered that Sentient Trader very often performs a better analysis than I do. In other words, the default analysis, the out-of-the-box analysis, I simply I choose an analysis start period, so I tell Sentient Trader what period of data to look at, but then I simply hit the Analyze button and I ask Sentient Trader to produce a manila or a plain default analysis, and this is that analysis. You'll notice a few differences. First of all, we do have, of course, a very prominent trough in March of 2020. According to the default analysis, that could be a trough of the 9-year cycle, not just the 54-month cycle. The other big difference with this analysis is that the 40-week cycle trough, as opposed to being positioned over here at the end of October of last year, has actually been positioned here in March of this year. And of course, the really big difference is that the 18-month cycle trough still lies ahead of us. So according to the default analysis performed by Sentient Trader, that 18-month cycle trough still lies ahead of us. However, I would like to point out the important point, which is that even though we're looking at two different analyses, our expectations don't differ very much. You will remember that when we were looking at the first analysis, I pointed out the next two things that we are expecting to happen. The first was an 80-day cycle trough in about a week or 10 days' time later in September. In this analysis, we have exactly the same expectation. And so even though we're looking at two different analyses, we have exactly the same expectation, which is for an 80-day cycle trough to form a little later in September. We then have a nest of lows. It's a slightly sort of straggly nest of lows over here, but that is the nest of lows for, in this case, the 18-month cycle trough. In the other analysis, you will remember, it was for only a 20-week cycle trough. But it is at the same time, at the end of November, perhaps early December of this year. And so our expectation is really very similar. The only difference in terms of this analysis is that that trough in the end of November is probably going to be a much deeper trough if it is a trough of the 18-month cycle. But in both analyses, we are, of course, expecting a trough at about the same time. So let's quickly zoom in and see what we can gather about the differences in the shorter time frame. And so let me again display the FLD. There is that 20-day FLD. And you will notice the point that I made earlier. Even though we are looking at two different analyses, the FLD is still, in fact, in exactly the same place. And so in terms of identifying trading opportunities, looking at both of these analyses, we would have effectively made exactly the same trading decisions, because we're looking at the same interactions between price and the FLD. If, of course, you are making trading decisions on the basis of the FLD trading strategy, which I should point out is only one trading strategy that can be applied to the insight given to us by a Hurst cycles analysis. And so we have exactly the same interactions here. I don't need to go through all of them again. Very quickly label them A, B, C. There's the support found at the FLD, D, E, and there's F over there, which is, of course, now it has achieved its target. There's the target. We're expecting here a G category interaction where the FLD is expected to provide resistance, and then price is expected to move down into this 80-day cycle trough, which is, according to this analysis, expected slightly later than the other one. It's only a matter of a few days. Okay, so I hope that demonstrates the robustness of this approach, if you like. Let's look at a third analysis, which presents a slightly different picture. This is an analysis that I discussed a few months ago when we were looking at a possible early occurrence of the 18-month cycle trough, and it presents the 18-month cycle trough as having occurred in June of this year. Let's take a look at it. So here is the bigger picture of that analysis. We have the same 54-month cycle trough in March of 2020. You will notice that I have influenced this analysis. You can see these pin symbols. That means that I have suggested to the software that a particular cycle trough should be pinned in those positions. The result of having influenced this analysis is that the 18-month cycle trough occurred in June of this year. Now, this is my least preferred of these three analyses, but I'm presenting it here today just because I think it's useful to keep an open mind and to look at the evidence in terms of why this is my less likely analysis, and to understand the subtleties of that so that you can develop your own experience in terms of judging a cycle analysis. So what we're going to do here is we're going to zoom in and take a look again at the FLD and the sequence of interactions. There are various reasons that I have discussed in previous market update videos why this is not my preferred analysis. It is a possible one, but it's not my preferred analysis. In this video, I'm not going to discuss all of those reasons again, but I am going to demonstrate the slightly different sequence of interactions that we had with the FLD and use that information to explore the possibility of this analysis. So, of course, we start tracking the sequence of interactions from the 80-day cycle trough, which, according to this analysis, was synchronous with the 18-month cycle trough that formed towards the end of June. I think that was the 21st of June. Here is our A category interaction, which did, of course, achieve its target, which is what we would expect following an 18-month cycle trough. So that is an observation that is in favor of this analysis. Price then found support at the level of the 20-day FLD, which it did very accurately. It came down, found support at the level of the 20-day FLD at about the time of the 20-day cycle trough. There is that 20-day cycle trough. You'll notice that according to this analysis, it's had to actually shift that cycle trough off the absolute low and position it 2 days earlier. I think you can probably see that that's the 20-day cycle trough, which is an indication that this might not be the best analysis, but it's certainly possible. It doesn't invalidate the analysis by any means. So that was our B and C category interaction. The D category interaction occurred over here as price came down on its way down to the 40-day, I beg your pardon, 40-day cycle trough over here. And again, that cross down achieved its target fairly accurately. Price bounced back up again, and so here we had an E category interaction, and that E category interaction also achieved its target. So far the sequence of interactions looks fairly good, and it's not invalidating this analysis in any way. However, we did have a little bit of an anomaly over here, which is where price came down and found support at the level of the 20-day FLD. That is, of course, at the same position as the 20-day cycle trough over there. Now, that's a bit of an anomaly because in terms of our sequence, we don't expect that. It doesn't invalidate this analysis because we do often see price coming back down to the FLD and finding support or resistance at a time that is not expected according to the sequence. But it does raise some questions about this analysis. And of course, the obvious answer to those questions is that the 18-month cycle trough would have been better positioned over here a month later in July in the analyses that we've been looking at so far in today's video. However, that is a bit of an anomaly. The next interaction where price comes down and crosses below the FLD is labeled the F category interaction, which, as I've already mentioned in today's video, provides us with a good short trading opportunity as price moves down into the 80-day cycle trough. Now, that was not really a very good short trading opportunity. Okay, it did achieve its target, and if you calculate the target, you'll see it's over here. So in some ways, it was a good short trading opportunity, but what happened next raises some serious questions about this analysis, because in the usual course of events, and this is something that I have observed over many, many years, there are Hurst Cycles traders and sentient traders around the world that have been working with the FLD trading strategy for many years now. And we usually expect to find a G category interaction where price finds resistance at the level of the FLD. So what happened here? Well, the G category interaction and then the H category interaction have to occur before the next 80-day cycle trough. So according to this analysis, the G and H category interactions didn't occur at all. Now again, that does not invalidate this analysis. This observation, or this sequence of price interactions with the FLD, is an observation that has been made over many years. But there are anomalies, there are occasions where there are interactions that are simply missing. And this potentially could be one of them. But it does lower my confidence in this analysis, which is why it is my least preferred of the analyses that we've looked at today. So what is the next thing that happens according to this particular sequence of interactions? And let me actually clear that, and let's zoom in and consider the next 80-day cycle. So according to this analysis, the 80-day cycle occurred over here on, that must be about the 3rd week of August. So that's the 80-day cycle. And so our first interaction would be the A category interaction. Okay, and now that A category interaction, and it is useful to point out here that you will see that the FLD is in fact in exactly the same position in this analysis as it was in the other two analyses. I would encourage you to go back and take a look at the video, and you can actually compare the position of this FLD, and you'll see that it's plotted in the same place. And the reason for that is simply because the wavelength of the 20-day cycle has been calculated by the analysis process to be exactly the same for the 20-day cycle, and so for that reason the 20-day FLD is in the same position. And so our target here was, I think this is the analysis that gave us a target of 54.70, and so that target was not quite reached, as I discussed previously. However, we have yet another anomaly. Here is the 20-day cycle over here, and at that point we would expect price to come down and find support at the level of the FLD, which it didn't. Now, if the market was particularly bullish, it is quite possible that the price simply couldn't make it all the way down to the 20-day FLD. That is something that we do sometimes observe in a particularly bullish market. But that is not really what happened here, because as you can see, price crossed down fairly clearly below the FLD over there. So strictly speaking, in terms of identifying these interactions, we would have to position the A category interaction over there. The B category interaction, as price came down into the 20-day cycle trough, is a matter of price not finding support at the level of the FLD, but actually failing to even reach the FLD. Well, that's a pretty weak identification of that interaction, I'm sure you will agree. The C category interaction will be the interaction where price bounces up and away from the FLD. Again, a very weak move, very poor identification of that interaction. And here is the D category interaction. Now, I know that many of you might be saying, but hang on a moment, shouldn't we simply be labeling this interaction over here as the B category interaction? Well, maybe we should. However, I would like to point out, as the person who observed the sequence of interactions, the number of bars that have elapsed. Okay? The B category interaction must, according to the definition of these interactions, be some kind of an interaction that occurs with the FLD, even if it is only price reaching towards that FLD, before the formation or at the time of the formation of the 20-day cycle trough. And so if the 20-day cycle trough has not yet formed in this market, then we would identify this as a B category interaction. However, when price is moving down into the 40-day cycle trough, which is exactly what this analysis is telling us is happening here, and remember the 40-day cycle should occur after about 36 days, and you can see from this bar count that we are currently at 25 days, so we've got about 9 days to go. And so you could suggest that the 20-day cycle trough has occurred over here, but it would have been a fairly late 20-day cycle trough. It is possible, but the chances are that price is now moving down into this 40-day cycle trough. And it is also possible, of course, that the 40-day cycle trough has occurred very early. Notice this whisker. So that would be a very early occurrence of the 40-day cycle trough. But my point about this discussion is that the interaction between price and the FLD as price is moving down into the 40-day cycle trough must be labeled a D category interaction, even if we are unable to identify a B and C category interaction. Sometimes when people are working with the FLD trading strategy and just coming to grips with it, they will determinedly identify each absolutely clear interaction as the next letter in the sequence, and they will ignore the fact, which is a very important subtlety, if you like, of labeling these interactions, that the interactions must be labeled in accordance to what is happening in the analysis. And when price is moving down into a 40-day cycle trough, then we should label that a D category interaction. And so that should be a D category interaction, even if we are unable to identify the B and C category interactions in this sequence. It's an important subtlety, and I'm sorry if spending so much time discussing it has been a little tedious, but it's a very important thing to bear in mind. And the other important thing to bear in mind, which there really is not time to speak about in today's video, is the concept of the character of each one of these interactions. When price crosses down below an FLD and actually achieves its target, that is in character for a D category or an F category interaction, and not for a B category interaction. And so it is very likely that this is the D category interaction in terms of this analysis. So let me bring this video to a conclusion and ask you whether you have identified the way in which we are going to be able to resolve the current analysis. Which is it? Is it the first analysis, the second analysis, or the third analysis? Now, one way in which we are going to be able to do that, or at least get a clue to that, is what happens when price next interacts with the FLD. Remember, the FLD is in the same position on each one of these charts, each one of these analyses. What's going to happen next? Well, according to this analysis, we would expect an E category interaction. And so if price crosses strongly above the FLD and proceeds upwards and reaches its target, then this analysis will increase in our favor. This will become the preferred, and not necessarily the preferred analysis, but it will become a slightly preferable analysis because of the sequence of these interactions. However, as I've mentioned, my two preferred analyses, with the 18-month cycle trough on the 19th of July, or the default analysis with the 18-month cycle trough still looming ahead of us, would cause us to expect a G category interaction when price next encounters the 20-day FLD. So that's going to be a very interesting moment where we need to be watching closely to see how price interacts with that FLD, which will help us to clarify the analysis situation and possibly increase our confidence in the placement of that 18-month cycle trough. I do hope that you found this market update interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.